Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today we have Ronald-Peter Stoeferle and Ira Harris. Ronnie is partner at Incrementum AG and responsible for research and portfolio management. With his team, he publishes the famous In Gold We Trust, one of the benchmark publications in gold, money, and inflation. In 2014, he co-authored the book Austrian School for Investors, and in 2017, The Zero Interest Rate Trap. Ira is an independent trader, a successful hedge fund manager, global macro consultant, trading foreign currencies, bonds, commodities, and equities for over 40 years. He was also CME director from 1997 to 2003. Welcome, gentlemen.
Hi, Richard. Hi, Ira. Thanks for being back again.
Ronnie, yes, glad to be here. I can't wait. I understand that Ronnie's been in China at Gold Conference. So what better way to start that out?
Yeah. You mentioned you were in Shanghai, China at a gold conference. Can you give us an update from there?
Yeah, absolutely. I was invited to give a speech, a keynote speech at a big gold conference in Shanghai. And it fits pretty well because we decided to conquer the Asian market next year as well with our In Gold We Trust report. So starting next year, we will publish the In Gold We Trust report in Chinese, in Mandarin as well.
Wow.
And so it was really, really exciting to go over to Shanghai. At the conference itself, I was really surprised about this extremely high level of sophistication, also from officials. You know, speaking to people from the big banks, from Shanghai Gold Exchange, Shanghai Futures Exchange, China Gold Association, and so on. And it's just interesting, you know, comparing the different views and attitudes when it comes to gold. Of course, also the time preference of the Chinese. They're really in for the long game, and it gave me a great view on the Chinese gold market. At the moment, it seems, you know, the Chinese tend to be bit of a, you know, they've got some sort of a gambling attitude, and they're very open about that. So for them at the moment, gold is a bit boring. They like to buy stuff that is rising, that is in a bull market. So I think it's at the moment it's still quite calm, but you know, China is still by far the largest gold producer, and I think next to India, the biggest gold consumer. So yeah, it's been really, really a great trip. Of course, we talked quite a lot about the trade wars, the currency wars. The Chinese are pretty laid back about that. I think they know that they're in a slightly better position. So yeah, when it comes to the economy, I think it's also interesting. This is something that we can observe also in, let's say, China proxies like commodity markets, Australian dollar, and so on. Of course, the Chinese economy is not doing so well at the moment. We're having money supply growth is imploding at the moment. But on the other hand, everybody says, you know, our long-term perspectives are excellent. Everybody's excited about the One Belt, One Road, about the China 2025 initiative, where they decided which are the, you know, the most important technologies. And interestingly, the People's Bank of China was basically the first central bank that made a monetary U-turn. So they already changed the reserve requirements, and I think this is something that we will see sooner or later, probably sooner from all other major central banks, especially from the Federal Reserve. So this is one of our main calls for 2019, the monetary U-turn.
And was there any discussion about the strategic planning or just the potential in general for a Chinese currency or a government base Chinese currency on gold, like tied to gold?
No, I think that's something that just won't happen because what would happen? A gold-backed renminbi would be extremely strong, and I think this watching the Chinese yuan or renminbi the last couple of months, we can see that they're doing everything to answer the trade wars with a currency war, and that's something that Mr. Trump doesn't really enjoy too much. So they want and they need a weak currency. So I don't think that all those rumors about the gold-backed renminbi will come true. But I think, and that's basically some sort of an open secret, everybody says that the People's Bank of China has got significantly more gold than those 1,800 tons that they officially announced. Many people said actually the Chinese have got more gold reserves than the United States, so more than 8,000 tons. And yeah, I mean, I think the main view that we're having at In Gold We Trust is that the next crisis might be a currency crisis, so not a financial crisis. And every time there's some sort of a realignment of our monetary system, let's put it that way, gold played a major role. And Chinese, they study history, so I think they know that, and it's no coincidence that the most important countries basically own quite a lot of gold. It's the US with 8,000 tons. It's the Eurozone holding more than 10,000 tons. The Russians are buying gold like crazy. Chinese have got probably between 5,000 to 9,000 tons. The IMF has got gold. So yeah, I think that there will be some sort of a revaluation of gold in the course of the next currency crisis.
And Ira, what do you make of the interest by the Chinese in gold?
Well, yeah, it's interesting to hear Ronnie's viewpoint on that, because, you know, when I look at it, I'll push back a little bit, that I have to ask the question. The Russians and Chinese are buying all this gold. There's no question about that they've been the biggest purchasers, of course, because it moves them and allows them to support some alternative to the U.S. dollar as a reserve. That's not a conspiracy. That's actually undoing many years of abusiveness by the United States, because as long as the United States can control that SWIFT system of dollar transfers, it's easy for them to invoke sanctions. So I find it interesting, but I've read so much about the Chinese. Yes, there's the issue, and again with Professor Michael Pettis. Is China going to morph into a more domestic consumer-based economy? And if they do, well, then a stronger currency would actually be helpful, because the Chinese consumers. So therefore, I think that, and as Ronnie aptly says, they play the long game. This quarter-to-quarter nonsense that we've been that Wall Street has foisted upon the world. I know I'll get finance professors who will push back at me. I had this discussion, but the Chinese do play the long game, and they definitely have that view. I would only ask if I was in China, and I've never been to China. Many people I love closer have been to China and have a lot to say about it. If the Chinese were going to create an alternative? Would they be almost bimetal, where they would, make it gold and silver, the traditional strengths of hard currency? So I wonder if there's any talk of that.
Well, silver is a big topic in China. Interestingly, the word for bank and silver is basically the same in Chinese. Somebody told me. So perhaps they would go for that, and I agree with Ira. I think going forward the next couple of decades for them, it's important to really stimulate internal demand. I mean, it's a huge market. We're already seeing that many manufacturing jobs, like those factories producing, T-shirts and shoes and whatever. Those industry are leaving to Cambodia, to Vietnam, and so on. While in China, they really want to build high technology. I think, when you talk to people, university professors, when you talk to parents about the education of their kids, you can tell that they're so eager that their kids study at the best universities, and they really, really work extremely hard. Some professors told me that like the best students are coming back from the US, from UK, and so on. So they're really into developing high technology products, and all those electric vehicles driving around. I was really impressed, and I thought, I'm having some sort of an Austrian economist background. I'm always a bit critical when it comes to government planning, but on the other hand, it sometimes feels like they are much more capitalists than we're in the Western world. So of course there's government control, and I had lengthy discussions about this social credit system and so on. But on the other hand, there's as an entrepreneur, you have got quite some some leeway and room to maneuver. So the entrepreneurial spirit that I could feel, that I could see, was really impressing. And this is something, coming back to Europe, this is something that I completely miss over here. So that made me really confident for the longer term. So I didn't really answer your question, Ira. If there would be some sort of bimetal standard going forward. As I've said, for now, I don't think that they want or that they can afford a really strong currency. But as they're in for the long term, and just to give you one really, really good explanation or example for their long-term thinking. There was a speech by the current Premier Minister Xi, and he said that basically in 500 years from now, he doesn't want to be the guy in history books that will be blamed for ruining the Chinese environment. 500 years. So their initiatives when it comes to environmental regulation and clean air, clean water and stuff, they're really serious about that. Yeah. So and they've improved significantly the last couple of months, and that's really their top priority. So that was really, really impressive and shows about their long-term thinking. And this is something that, of course, with our 1 quarter and whatever to the next election thinking, that's definitely a big competitive advantage.
Yeah, it has been, will be, and it seems to me that when we look at Ronnie, I don't know how old you are, Richard. I don't know, but I'm 65 years old, and having been in America and remembering, they are taking the Chinese, the Japanese model. When I was a young child, if it was made in Japan, you used to laugh at it. It would be a transistor radio. It would be little paper fans. You all made it, and made in Japan was considered very cheap, and then all of a sudden it shifted. And I can tell you, I had a moment in my life where I saw it shifted. I was just learning how to drive. So it was 1969, and they used to teach it at the public schools. That was where I lived in Chicago. They would teach you driving. So there was a Japanese delegation who came to visit to see how America was teaching its young people to drive. And I just happened to be there doing my driving, and a good friend of mine had just bought a Honda motorcycle. This is 1969. And when the Japanese group, and there were probably 50 of them, when they saw the Honda motorcycle parked there, they were surrounding it, taking pictures, and were amazed that Japanese products were being sold like this in the United States. So then you saw it shifting dramatically. And then, of course, it came with cars when Honda went into smaller cars, Honda and Toyota, especially after the oil embargo of 1973. So the shift becomes dramatic. So when Ronnie speaks to that, I saw it and lived it. And I truly believe that the Chinese are absolutely following the Japanese model, which is high-tech, highly engineered products, a German model, by the way, also, high-end products that, produce, and they're able to bring them in at a lower cost, and they just keep moving up the food chain. And yes, it is a mercantilist model, because you can't say Japan absolutely had a mercantilist model, but I would argue that Germany, in a lot of ways, has a mercantilist model. So I think that is, in fact, and I think Ronnie's 100% right, that's the way they're going to proceed here. Well, they need, the Japanese did at one time have a much weaker currency, but they learned to adjust. And of course, probably if I go over the last 35 years, the strongest currency in the world is the yen, because we went from 250 yen to the dollar all the way down to 75 yen to the dollar, and now we reside at 113. And I can tell you, when I started as a currency trader, it was 350 yen to the dollar. So there's been massive monetary changes through that period, and good engineering and good marketing and high-end products can overcome that. So we are really in an interesting time with the Chinese economy coming, and then there's India coming not far behind. And I don't think India is at all the same story in any way, shape, or form. Just because I talk to people, and as Ronnie raises that really good point, because I just had this discussion with a guy who works for a large American corporation who's been living in Shanghai or on and off for 24 years, building out factories. Now he's just advising. And where are they going to? Vietnam, Thailand, Malaysia again. But not so much India. They're a little nervous about India because India seems to be too bureaucratic. Because I asked him that question, because when he gave me his list of where the factories were moving, I said, India is not on your list. He says, India has many great things going, but they're so heavily bureaucratic that it makes it difficult.
Right. Yeah. And in terms of gold, Ronnie, what currency are you most bullish on gold? Like, is it the Swiss, like a gold Swiss franc trade, or gold euro? What are your thoughts there?
Good question. I mean, Swiss franc we're based in Liechtenstein, and they've got the Swiss franc. So I still, having a look at the market, the debt situation, economic developments in Switzerland. I think it's for the longer term. It's one of the few safe haven countries. Our currencies, of course, the Swiss National Bank tries everything to destroy that status. But I think, compared to the euro, for example, I don't know. I'm not too excited about the US dollar. I think good friends of mine like Brent Johnson, they're making a brilliant case about the strong dollar. From my point of view, the dollar is kind of rolling over. On the other hand, the euro is a train wreck as well, and I just really don't know what the ECB will be doing when recession clouds will increase, and I can see at the moment, talking to German manufacturers, talking to small and medium-sized companies in Germany. Germany used to be some sort of the growth engine of Europe, and now they're becoming more and more problems. We can see the Germans have been pretty efficient in destroying their most successful industries, like the utilities. Afterwards, the banks, of course. Now, when they're talking about the merger of Deutsche Bank and Commerzbank, everything should get better. That's not going to happen. Now they're trying to really destroy their automobile industry. I don't know why. But it seems that the whole mood in Germany is really getting worse and worse, and that's confirmed by most of the macro data that is coming in. So I think recession clouds, not only in the US but also in the Eurozone, are coming in. And that makes me really, really excited for gold. In which currency? I don't know. Tough to say, probably on a euro basis, but just having a look at the performance in 2018. I mean, in dollar terms, gold was up 14% last year. This year we are down 5%, but in Australian dollar terms, in Canadian dollar terms, in Chinese yuan terms, in euro terms, in British pound terms, in Indian rupee, gold is up this year. I mean, not big time, between 0.5 and 5%, but still it's up, while everybody thinks that gold is just dead. And I really like this, some sort of divergence between price action and market sentiment.
And your thoughts, Ira?
Well, Ronnie and I are certainly reading from the same playbook. I think the gold Swiss is the one that's lower, and I keep looking at that. And it's interesting that Ronnie brings that up. And I know him and I've had a couple discussions about the Swiss Central Bank, and we see it very much similar. As I'm looking at my screen right now, I think the gold Swiss is actually up against the gold by about what for the year. Let me have to go back and take a look. Let's see, it closed out at 1,263 francs to an ounce of gold, and we're trading at 1,230. So we're down about 2%, maybe a little bit more. But I think this is absolutely right, and we always return to this theme. And when I get my readers to read, I try to make them understand. They think that gold is, they buy into what the narrative spun on in the mainstream media, from Fox Business to, it's always about gold and inflation. And I keep trying to get them to understand it's not gold and inflation. It's the central banks losing control of the whole situation. And if you had to watch Mario, I listen to Mario Draghi. I always listen to him because some of it is just such great entertainment. Others, because he does provide nuance, and I always try to search for the nuance in his discussions. But these central banks, and it includes the United States, because the United States is trying to figure out this exit strategy. They've never had an exit strategy from the QE. They did this in a panic mode because they were trying to create inflation. Their greatest fear, and in Paul Volcker's new biography, he talks about it, the fear of deflation. And that's what people have to understand. You buy gold because central banks fear deflation, because they will go to any extreme to prevent deflation from setting in. And this isn't the place where we're going to make an argument whether it's right, wrong. That's a whole separate place, and we'll go back to Hayek and Schumpeter and Keynes. We'd have to sit on a stage, and Ronnie would have to bring his library down so we could go through the books. But that's the difference, and I think that's where Ronnie goes with this too. It's what are the central banks going to do, and that's why you own gold. Listen, we've seen it when people believe that it's all under control, that they've done a good job, then people will leave gold, and they were right to leave gold in 2013 because it looked like the central banks really had saved the day. and there were alternative investments. But I think now we're coming to a new point where we're going to start to really weigh this out. And as Ronnie talks about, China and Russia really become important here, and especially for the need to avoid sanctions.
And speaking of the Swiss National Bank, Ronnie, what do you make of what's happening in Europe with the European Central Bank, the stopping of asset purchases, and the potential for the creation of a European monetary fund, which could issue EU bonds?
Well, honestly, I didn't follow the protocol or the announcement too much, because it just makes me it's just a bit annoying reading that stuff over and over. I think sooner or later that there will definitely be some sort of a Eurobond. I think that's just the next stage. I think Draghi, he postponed the end of QE for quite a while. I think they were pretty vague about the first rise in interest rates, probably in fall 2019. I wouldn't bet on that, actually, because if numbers come in weaker and weaker, they're probably gonna delay it. And then the big question is what sort of QE they're gonna implement the next time. They probably at some point they will start buying equities, REITs, whatever. I think it's some sort of the Japanese way. But I think Eurobonds in the course of the next crisis will be introduced. I'm pretty certain about that. But and that those I think that one of our other main calls for next year is that gold will really pick up momentum when they realize, and we call it the emperor has no clothes moment. So the moment when they realized, okay, that this whole marketing campaign, this whole propaganda about everything is fine now and we can raise rates, and we're like in a Goldilocks scenario with price inflation not being a problem, economic growth being fine, we can just steadily raise rates. That's just not how it works in reality. And I think when the market realizes that the Federal Reserve will have to reverse, I think that's going to be the point when gold really picks up momentum. And I think, with gold at 1360, when we rise above this massive resistance zone, there's quite a lot of room up till 1500. And I know that many institutional investors, they're waiting on the sideline. They want to enter the market, but they need some price confirmation. There's this great quote by Bernard Baruch. He said, it's all about breaking the continuity of bearish thought, and that can only happen with price action. So we need some justification, some positive price action. I think at 1360, 1380, that's going to be the point in time when institutional players re-enter the gold market big time.
And your thoughts, Ira?
I don't disagree with any of that. We'll go back to the Eurobond because I write about it so much.
Yeah.
That's the dream of people like George Soros. I'll say the whole Davos crowd, and that's not conspiratorial. That's what they'd like. They bought in, and rightfully so. We go back to Rudy Dornbush and Martin Feldstein and Milton Friedman. Some of the best economists, talked about at the beginning of the euro or prior. That it was a mistake because they were doing things backwards. They were making the politics before they were making the financial underpinnings, and that's exactly where we exist in the world. Classic Bernard Connolly 101, who discusses ad nauseum, I may add, and that's where we're at. So I think that's what Draghi's plan is, and will be. Which is, hey, my exit strategy is I'll fold all this sovereign debt that is on the books of the ECB into a Eurobond. I will force a birth with great pain. It'll be great pain to the financial system, but it'll bring into fruition. So that which the politicians haven't done, I believe Mario Draghi believes he has created the foundation to do as the final step, because none of these central banks, again, have an exit strategy from what they've done. And that's the Fed, too. The Fed is experimenting, and we're seeing the experiment, and the Fed is arrogant. There's an arrogance taking place. Simon Potter, especially, who runs the System Open Market account, they don't want to back off from increasing rates at the same time that they're shrinking the balance sheet, even though they've never shrunk the balance sheet, and they don't know the outcome here. So they're doing them both together, and they may be doing far more harm than they'll ever admit to. The Japanese openly have no exit strategy, and the ECB, my assumption is that the exit strategy that Mario Draghi is working on is the creation of a Eurobond, which is going to wreak political havoc in what we are now calling the new Hanseatic group, the Dutch, the Germans, the Austrians, because they're going to bear the cost of this. Is what's going on. I mean, you can't take a picture of it, and unfortunately, that's a big part of the way people believe what news is. But there is a process here, and that seems to be where it must go. That's just an opinion. I think it's an educated opinion. So we'll have to watch this very intensely. And if that's the case, with the pains of that, I think Ronnie couldn't be more right. I think that we will see a move to gold. I think you're seeing it now in some of the mainstays of Europe, and Ronnie can speak to that far better than I can. But I think German citizens who are being so financially repressed are becoming, quiet buyers of gold just to protect, because all it does is really it's the ultimate currency to protect your underlying value of your wealth.
And finally, gentlemen, last question. What are your thoughts on the effects of escalating political populism and even political violence globally, in particular now in Europe, and its effects on the economy and the financial markets? Ronnie?
Well, we could talk about that for many hours over a couple glasses of red wine. No, I think the thing is, I think many things in society and politics basically boil down to our monetary system, and I think that the Cantillon effect basically being one of the main reasons why this gap between poor and wealthy is getting wider and wider. I think this is important to understand. I think the populism that we're seeing, not only in Europe but all over the world, that's no coincidence. It's just a sign that people, their real disposable income is shrinking. I think that something that really worries me is that nowadays it's it's tough to have a decent discussion about politics, and I don't have problems discussing politics or economy with a socialist or a communist. I got no problem to have like a solid discussion and trying to convince him to make my point. But nowadays this is getting so emotional, and there is no dialogue happening anymore, and this is something that is very, very worrisome that this is just not happening anymore. And we're seeing that, of course, social media creates some sort of a filter bubble. It's just easier shouting at somebody on Twitter than shouting at somebody that you're sitting on the same table with. And I think, our whole political our political discussion is getting more emotional and less rational, and that's definitely not something positive.
Yeah. And your thoughts, Ira?
Yeah, that's as Ronnie aptly said. This is a major discussion. I agree with him. People who are read and who understand, you can have real discussions, and I do all the time, and I honor them because it's about discourse.
Mm-hmm.
But too many people with rampant a sense of validation. We become a validation world, and I don't need validation. I don't want validation. I want discourse. I want to learn. And I think Ronnie's point is right. And you see it in France. This is a global phenomenon. Trump was the one who brought it to the fore, but it really is the effects of globalization. And I'm a globalist. I'm not anti-globalization. My whole life has been studying multinational corporations, capital flows, and then finding ways, of course, as I got older, once I got out of school, out of formal school, putting it to work and making it a profitable business for myself. But there are strains to it, and unfortunately, a lot of the models that economists have built, and I will argue this, do not take in globalization. Because when the Fed measures unemployment and wages, it does it on a domestic basis. But if things are changing in the world, when you unleash, when the wall came down, the Germans understood what was happening, and you know what? It wasn't long that we got Hartz IV, and because the German unions were very accepting because they knew that jobs were going to Eastern Europe. As long as we live in globalization means that money can flow freely around the world because the goods will follow, but money goes. And as long as it can go and chase low wages, the impact on the domestic workers and the middle class, most importantly, is very difficult because capital runs away. I mean, it's really classic Marx. It's what Marx talked about, and many others at the time. So you are involved in that world. So that's what has to be done. And capital has just raced way too far ahead and has garnered the gains, which is why we've seen record corporate profits in the United States. It is the logical outcome of that. So that's what they have to speak to and they have to understand. And until they do that, you're going to have France and you're going to have other places and Germany is the one that really makes me nervous now, but we're not there yet. But it's definitely shaking. The foundations there are beginning to shake. And it is mostly, and I don't think immigration is just a cover. It is, as Ronnie says, it's money and it's financial repression that underlies it. And the mainstream media just doesn't report it.
Wow, great thoughts and insight, gentlemen. How can our listeners learn more about your work, Ronnie?
Well, everything is on our webpage, incrementum.li. We've got the In Gold We Trust report, of course. We're already working on the 2019 edition. Then we've got the quarterly crypto research report. Everything is on our webpage. We've got a couple of funds. We're doing private wealth management. And yeah, I'm pretty active posting charts and my comments on markets on Twitter. My handle is Ron-Stoeferle. Yeah.
And Ira.
Notes from Underground is the blog site. Just register at iraharris.com, YRAHARRIS.com, and look forward to the discussion. Ronnie, Richard, great to talk with you. I'm going to jump off.
Thank you very much. Merry Christmas. Take care, Ira.
Thank you. Merry Christmas to you, Ronnie.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.